Kenya's largest bank by market value, that's Equity Group Holdings, has ramped up its Pan-African ambitions, with the DRC being the latest addition to its geographical footprint. Now, the bank currently has a presence in about 6 countries in Eastern and Central Africa, and it says it's targeting small businesses in sectors like mining, and it plans to grow its customer base to at least 100 million in the next few years. Last year, the bank saw the dominance of its Kenyan operations start to decline, with its other subsidiaries contributing 44% of group assets and about 44% of total revenue. CGTN's Uche Okoronkwo sat down with the CEO of the bank, James Mwangi, to discuss the progress and outlook for its regional strategy.
I think when we look at long term, we want to play a catalytic role of ensuring that the sailweed that has propelled the East African region to be the fastest growing region in the world is sustained. So we want to catalyze that by increasing our investment to the dreams and aspirations in the region. We have realized this region has 2 major advantages, being a base of allowing the world to diversify manufacturing, because I think everybody doesn't like the experience of the global broken supply chain. So there is need for local and regional supply chains. So we are really focusing on that so that sustains the momentum of growth. The second thing we have realized that Africa holds 65% of all arable land. And when you analyze that, the East African region carries about 60 of that entire land. And we would really like them to see whether we can invest to ensure this region provide diversification in production to guarantee global food security. And when you combine those 2, if we really push productivity gains together with mineral resources in DRC, Zambia, and Tanzania, then we can make this a major manufacturing hub. And that is our path of supporting the region in a plan we are calling the African Recovery and Resilience Plan, which is a transformational plan of seeing this region industrialized. And so we know that might be a multi-decade aspiration, but if it's then sustained, to sustain the rapid growth of the East African region.
And I'd like to get your take on specific markets, because we have seen you injecting more capital into markets such as Tanzania and Uganda. What specific markets are you looking at?
We have realized that the strength of the East African region is in the diversity and competence of each country. So in Kenya, we are focusing in supporting a manufacturing base. We are focusing on supporting a service industry because Kenya acts as a hub for the region. But we realize Tanzania brings on board a very good southern corridor as an agricultural food basket for the region. So we are investing heavily. But we have also seen that Tanzania can augment DRC in terms of mineral resources. So we are also supporting mining in Tanzania. But infrastructure is what will connect Tanzania, Kenya with the inland neighbors of Uganda, Burundi, Rwanda, and DRC. So again, we are supporting the development of infrastructure. We realize Kenya has 93% of its power coming from green renewable energy. So again, we're seeing we need to maintain and support the government's aspiration of 100% green renewable clean energy by 2030. But when you go to DRC, you see the biggest opportunity in DRC is to have DRC process its own minerals and stop selling low materials, but processing it. And one product or project that we have really focused on is to see DRC produce batteries for the electric car, because it has 60% of 68% to be precise of global cobalt, and cobalt is the biggest component in battery manufacturing. So it is that value addition and creation of value that we are focusing on in DRC. We also are focusing on integrating the artisanal miners so that you mainstream that and they become part and parcel of the mining industry without being taken advantage of by traders and middlemen. And then lastly is to exploit the opportunity of DRC to contribute to regional food security. DRC has 9 months of rainfall in a whole year. So it can really be a major global producer of cereals. So we are investing heavily in agriculture. Uganda, we are supporting Uganda in its endeavor to produce oil and become really the major oil producing economy in East Africa.
What about Ethiopia? Because the government just came out and announced that it's opening about 5 licenses in the banking sector. Are we going to see equity at the forefront of that bidding process?
This has been long coming. As you know, we set our regional office, our rep office in Ethiopia nearly 6 years ago. We were very confident we'll get a license. So far, we haven't got a full banking license. We have read the promise, but we also know that the legal framework have not been enacted by Parliament. So we know there will be a time to wait. And then the announcement was that they will issue the 5 licenses within 5 years. So we don't know the exact precise timing. But it's a country of great interest to us.
And I'm curious about other markets such as Rwanda, Zambia, Mozambique. Equity has made an effort to get into those markets. Can we get some progress? Are we going to see any further acquisitions in these countries?
We have done very well in Rwanda. We are now the 2nd largest bank in Rwanda. We have realized that the trade routes between DRC and Tanzania passes through Zambia so as to really complete servicing that supply chain. We realize we have to really explore opportunities in Zambia. And then suddenly it dawns on us that if you're in Zambia, you shouldn't leave out Mozambique, Angola, and maybe Zimbabwe. So it looks like the future plans of equity will face south and hopefully bring the southern region, the SADC region, to be part of our East and Central Africa operational region.